go into the broader property market now and how the housing market is shaping up for the rest of the year, given we're halfway through. Anthony Landahl from Equilibria Finance joining me now. Anthony, good to see you. So, I mean, when I look out there, things look pretty pricey, but how have we come in the 5 years since COVID?
Yeah, some recent data's come out that's quite interesting. Obviously the COVID pandemic, which we're all trying to put behind us, created a lot of challenges, but one area that saw a lot of growth was the housing market. Some recent data's come out to indicate that through that 5 year period since COVID, housing prices nationally have gone up around about 40%, just under 40%. That was largely driven by the regional areas. Regional Australia had growth of 56% since COVID, and capital cities around 33%. But I guess that has a lasting impact in terms of where we are today with affordability challenges. It was mainly driven by internal migration, the way we work changed. A lot of people were moving to some of those regional areas. And 5 years ago, a lot of the housing was probably deemed more affordable. So it did drive up prices nationally by close to 40%. That's obviously impacting the market today still.
Does it flip though? Because I know, and I'm sure anecdotally you know as well, being in the market, a lot of people decided to move out, the tree change, the sea change, whatever you want to call it, because they could work from home. But now that people are having to be in the office more or come back to the city, does it flip, or what are you seeing in terms of where the median price is?
Yeah, median prices, well, nationally they're just under $900,000. Capital cities still drive the median price. It's just over $1 million. But regional areas are about $700,000, which has grown markedly. So the regional areas are still an attractive proposition. I think the way we work is still evolving. I think a lot of the people that originally moved to some of those regional areas, the attractiveness of that has gone in terms of a working environment. However, in terms of affordability, a lot of those commutable areas where you might be working 2 or 3 days, whether it's Central Coast outside of Sydney, Sunshine Coast outside of Brisbane, they're still having some strong growth. But yeah, median house prices in Sydney now are close to $1.5 million. In fact, in Brisbane, they're now over $1 million, more than Melbourne. And some of those regional areas are still a lot more affordable, being around $700,000 or $800,000.
All right, so now we're halfway through the year. It's cold out there. I don't think people want to go to auctions as much as potentially they want to in spring and summer, but how is the market shaping up for the remainder of the year?
Yeah, the market was fairly subdued at the end of last calendar year, November, December and into January. That's always a little bit of a slower period anyway coming into the new year. But on the back of some certainty around where we're going with interest rates, we've now had 2 rate cuts. That increases borrowing capacity around about $50,000, generally speaking, depending on situations. We've got some stability now. Obviously the election's over. We understand where the government policy sits. There's some changes coming that's going to help first home buyers get into the market. We're also seeing more supply on the market. So I think what we're going to see in the next 6, 7, 8 months is demand's going to remain strong. And we're going to start seeing some upward pressure on house prices again is what I believe. We've had fairly subdued growth, as I mentioned. That's fairly nationally. That really strong growth in Perth, Adelaide and Brisbane has come off a little bit. Sydney's growing again. And I think we're going to see a fairly strong market in the next 6 to 12 months on the back of interest rate cuts. Most likely more to come, probably as soon as July. Government policy also stimulating demand, and whatever measures we're taking for supply, which is much more of a focus, they just cannot keep up with that increased demand.
So what does all this mean then for renters? Are they facing big hikes again, or there's been changes, I guess, in New South Wales too? Yeah,
there's been changes in Victoria. There's been changes in New South Wales as well. That in fact, a lot of those changes affecting landlords. We have seen that real crunch in terms of vacancy rates ease up a little bit. Rentals are, the rate of growth in rents has dropped a bit, which is good for renters. Part of the reason for that is there is more investor stock on the market. Investors are back in the market. That creates more supply for renters. And that real surge in migration and that real surge in rentals has become a little bit more subdued as well. In fact, there's some pockets of Sydney now where, because of the market has come off a little bit, it's actually some renters are now finding it more affordable to think about getting a mortgage, which is a little bit counterintuitive. But some of those areas with a bit of extra supply in units and stuff like that are having that effect as well.
What about rent vesting?
Rent vesting it was a bit of a catchphrase, but it's eased up a little bit, but it's still very popular. There are people who just cannot afford to buy a house where they want to live. As I said before, the median house price in Sydney's just under 1.5. The median unit price is about $860,000. So there is still an attractiveness around essentially living where you want to, renting, and buying an investment that for you is an affordable price point but gets you into the property market. A lot more common. It's getting common amongst first home buyers as well. So yeah, it is something that is here to stay, I believe.